Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dong Jackson, Tony. Now let's start today's group discussion. Good evening everyone. First, let's look at 2 topics. The first is chaotic data and the adjustments Trump is making. The second, of course, is today's hope for the whole village, which is once again NVIDIA. We'll take a look at that in a moment. So mainly, let's take a look at why we call it chaotic data. Last night, some data was supposed to be released. Well, actually, some of it still hasn't been published. For example, industrial production and import-export, which is basically the trade balance, wasn't released last night. But tonight, they will release part of the numbers. Okay, so something really strange happened yesterday. Suddenly, they released the number of people applying for unemployment benefits for October 18th. But if we take a closer look, what's odd about this? The government shut down starting October 1st, so we missed a few employment reports, right? Including the number of people applying for unemployment benefits. From October 2nd, October 9th, October 16th, October 23rd, and October 30th, there are 5 reports here. Then add November 6th and November 13th, which are the 2 reports from November. So that's 5 reports from October and 2 from November, making a total of 7 reports. But if you look at the report from October 18th, it seems out of order. The closest one before it is October 16th, so how could there be a report on October 18th? That's really strange. Also, there's another thing. Later on, after I finished broadcasting, I saw a news article which said a spokesperson from the US Department of Labor said it was a technical issue that caused some of the data to be released early. That's not scary at all, right? But think about it. If there's a technical problem, a technical issue, then what we're seeing is an incomplete report. And we don't even know which part belongs to which report or which state. Yet, it just gets published like that. So I want to tell everyone, hey, you really need to be careful about this going forward. Reports released by US government agencies, there are often these, well, there could be quite a few strange things happening, so you really have to be careful. If the data looks too good or too bad, it's best to stay calm first. Let's take a closer look at the data before making any decisions. Now, just looking at this so-called number for the 18th, the number of people receiving unemployment benefits is 232,000, which is roughly around the average. And then the number of people continuing to claim benefits rose from 1.947 million the previous week to 1.957 million. Okay, this is also roughly in line with the level before the whole shutdown, which means that this is, there really hasn't been much change. So why did this number come out? It's probably because during the shutdown, unemployment benefits that hadn't been claimed from the government could be downloaded, and maybe someone accidentally uploaded them after downloading. Could it be someone like me? It's just a guess. We still don't know for sure, and maybe we'll never know. But up until October 18th, this was just so unexpected, so sudden, and then yesterday, it was just announced like that. The spokesperson for the Department of Labor also said that the complete data will be released before the end of the workday on Thursday, which means that tomorrow night, Thursday, we'll see this. Well, applying for unemployment benefits is really a nerve-wracking thing. They will release it before the end of the workday on Thursday. Generally speaking, the number of people applying for unemployment assistance is usually announced at 8:30 during daylight saving time in the summer and at 9:30 during standard time in the winter. So releasing it before the end of the workday is kind of leaving a little suspense. It doesn't necessarily mean it will happen as expected. It may not be released as scheduled. There's also another thing. The reports originally scheduled between October 2nd and November 13th will not be released. In other words, those 7 times I just counted for everyone, those 7 reports won't be made up for. They're just lost like that. But then it becomes even harder to explain where the October 18th data actually came from. So it looks like the US government is basically getting ready to tell you, whatever, from now on, only the data collected after the government reopens will be considered official. That October 18th number might just be a reference value. Honestly, that's pretty scary. The more you look at it, the more it seems like maybe the numbers from the test environment were accidentally sent to the official system. It's really a mess. Alright, anyway, tomorrow we'll just be waiting for the release of the new unemployment claims numbers to see if there are any unexpected jumps. According to what we just talked about, during the government shutdown when federal offices were closed, they actually collected some numbers from state governments. They did some statistics. Their numbers aren't as pessimistic as ADP's. Basically, the figures stayed about the same before and after the government shutdown. But of course, the actual numbers will be affected. Why? Because federal evaluators have to determine exactly how many people were actually removed from the payroll, specifically taken off the payroll records. As for your unemployment insurance fund, we don't know about that, and this number might not be available until a few weeks later. So just letting you know, you should expect this data to be messy in the future. Similarly, if only one set of data has issues, then there's no need to make a big fuss about it. But the problem is, there's another set of numbers, a smaller set, that's the US Treasury's International Capital Flows Report. As for this report, the main focus going forward isn't really on the inflow or outflow of funds. What everyone really cares about is how much US debt China has bought or sold. It's become more of a gossip topic. Not exactly gossip, but you get the idea. Everyone's focus is really on China's actual holdings of US debt, and that's a big deal. Just now, we saw an unexpected release of unemployment claims numbers, and this time, out of the blue, they're giving us a 2-month tick flow report. So they're giving you 2 months worth of data at once, and you can't really tell which month is which. You just have to digest it slowly. All right then. Here's the main point that everyone's paying attention to. China's holdings of US debt. In September, compared to August, it decreased by $500 million, dropping to $705 billion and $5 million. And while it's still continuing to decline. But as everyone knows, Belgium actually increased its holdings by $12.5 billion, reaching $466.8 billion. Wow. So why specifically mention Belgium? Because, well, there's an unwritten rule that's pretty well known in Europe. When it comes to buying and selling bonds overseas, China's transactions are often carried out through Belgium. This is probably because they use what's called Euroclear for centralized trading and settlement, since there are few places where this can be done. If I remember correctly, besides London, it's either Belgium or the Netherlands or somewhere else. There are about 3 or 4 places that have this capability. So these places have this function, and China has long used the Belgian hub for these operations. This is what's been increasing, but what I want to talk to everyone about is China's gradual reduction of its holdings in US Treasury bonds. This is a long-term trend. It won't be affected by increases or decreases in a single month or in any particular place. Why? Because trade volume has been consistently declining. Now, holding US Treasuries is part of foreign exchange reserves. What's the purpose of foreign exchange reserves? It's to pay for your dollar-denominated obligations. Besides the decline in imports and exports with the US, China is also emphasizing local currency transactions in more and more deals. So its holdings of US Treasuries and dollar assets will only continue to decrease. Alright, that's basically it for the data part. But yesterday, there were still some regularly released figures. Since these were released as usual, their reference value actually becomes higher in this kind of short-term situation. The main thing yesterday was that ADP released its numbers. Every week, they assess the changes and increases and decreases. As for their numbers, they basically use a 4-month moving average, and then keep updating and releasing the data this way. You can see that the number on the far left for November 1st shows a decrease of 2,500 people. But if you look at the past few weeks, for example, the week before, October 25th, there was a bigger decrease, while the others were still increases. However, there have been 2 consecutive weeks of decline. It looks like after early October, starting in late October, the momentum in the job market has started to go down. This is because, after the US government shutdown, this actually still has an impact on the private labor force in the US because, after all, there are still some organizations that rely on the federal government for their livelihood, so they will definitely be affected. Also, at the same time, there was a poll conducted between October 23rd and 25th, which was a relatively short-term survey, showing that 5% of respondents were worried about losing their jobs. So overall, the employment data still looks rather weak. Okay, and in addition, yesterday, the NAHB released the Housing Market Confidence Index. This part did indeed rise, reaching 38 points, which is the highest reading since April. However, the threshold for this index, the dividing line between good and bad, is 50. The current reading is 38, which is better than the expected 37, but there's still quite a gap between 38 and 50. So it seems that the confidence among developers is relatively low. There's talk that developers are facing a problem. Even though there are many incentives to buy homes, it's still very hard to attract buyers. Why is that? Because interest rates are still high and income uncertainty is still there. So it looks really not good at all. So that's why Trump would want the Fed to have lower interest rates even more. At least the housing market he's most familiar with would be in a rebound situation. Okay, next, let's take a look at what else there is. There are some smaller numbers. The New York Fed will release the services index, which is showing some improvement, rising from minus 23.6 to minus 21.7. Now, something I think is more important is the factory orders here. Factory orders increased by 1.4% month over month. This was in line with expectations. In July, there was a 1.3% month over month decrease. If you exclude the transportation sector, it's a bit weaker, with only a 0.1% month-over-month increase, which is lower than the expected 0.3% and also lower than the previous 0.7%. And if you exclude excluding aircraft, the non-defense capital goods orders, these are what we call core capital goods orders, are directly related to the investment component in GDP. For August, they increased by 0.4% month-over-month, but the July figure was still relatively low. So this is still it seems that based on the numbers released for August, this figure doesn't really provide much support to GDP from the investment side. So tonight, there will be a release, actually, we've just seen it announced, the MBA, the Mortgage Bankers Association's Mortgage Application Index. I saw that. It's down, but that's because it's week over week, this week compared to last week, so the fluctuations are naturally pretty big. Today, the trade balance and import-export deficit will be released. So here you can see that the decline is happening again and again. But honestly, I don't necessarily think that's a good thing because the US doesn't really export much. So when there's not much import activity, it doesn't necessarily mean it's a good sign. So when you see the trade deficit shrinking, don't get too excited because it doesn't necessarily mean exports are increasing. It could just be that imports are decreasing, which is what's causing the overall trade to shrink. Now, a decrease in imports can mean two things. One, it could indicate that consumer spending power is declining. The other possibility is that there's a supply shortage. When supply drops, prices tend to become sticky and don't fall easily, which is a persistent problem. This is another way inflation can be pushed higher. Also, before November 19th, I mentioned to everyone that this number, the Federal Fiscal Budget Monthly Report, has always been scheduled for release, but the timing keeps shifting back and forth. It keeps changing and hasn't been finalized yet. All right, but what's more important and more certain tonight, besides the trade balance? The most important thing is the FOMC meeting minutes. This is key because the Federal Reserve almost always releases data, except for industrial production. They pretty much publish everything else. Now, what's crucial about this report is that we need to see whether the Fed officials' positions in the minutes match the differences in opinion they've expressed afterward. If we look at the whole picture, if the meeting minutes that come out show that the feedback or reactions are quite divided, then the probability of a pause in December or the chance of a rate cut being paused will increase. So this is something we might see from tonight into tomorrow morning. The second most important thing is to watch this. The first most important thing, as I just mentioned, is to pay attention to this response. Now let's talk about Trump for a bit. Let's spend some time talking about him, because actually, don't you feel like Trump's voice has gotten a bit quieter lately? Well, that's probably because he's more focused on domestic issues in the US, which I'll talk about in a moment. But the main thing is, on November 4th, there will be local elections in the US, mainly for the mayor of New York City, the governor of New Jersey, the governor of Virginia, and the state legislatures of those two states. This year, the Democratic Party won by a landslide, and that's because many of these places are already blue states or strongholds. Basically, they're Democratic territory. Now, people are calling it a landslide because compared to the average vote share in the past or the numbers from the last election, everyone did better than those previous averages. The number of votes for the Democratic Party increased across the board, so that's the situation. That's why people are calling it a so-called landslide. Especially when you look at it this way, you can see that Trump's disapproval rating has climbed up to 54.4%, while his approval rating has dropped to 43.4%. Although things have seemed to improve a little bit recently, the problem is, in my opinion, that the degree of improvement really isn't enough. It's not looking too good. If you were to use today's approval ratings to vote in the 2026 midterm elections, Trump would have a really tough time, and the Republicans might lose badly, especially in the House of Representatives, where it looks like the chances of losing control are pretty high. So lately, we've noticed that Trump has been talking less about the stock market. Now, let's take a closer look at this, shall we? Of course, after looking at the approval ratings, there are some more detailed figures. When we look at the main economic policies, let me show you. The main trend is in economic policy. Here, the disapproval rate is 55.6, which is actually quite high, while the approval rate is only 41. So that's pretty bad. And when it comes to prices, it's even worse, because the disapproval rate is 61.1 and the approval rate is only 35.6. That 61.1 is even higher than the overall economic policy disapproval rate. In other words, when it comes to the economy, some people might be more concerned about things like employment, not just prices. That's something to consider. But if you take out employment and just talk about prices alone, the dissatisfaction rate with prices is even higher than when you factor in other considerations. So here, we have to say, Trump is actually under a lot of pressure. He's in a pretty tough spot right now. And similarly, let's take a look at another area. What stands out with a clear gap is, as shown in green, foreign policy. This is where the difference is quite significant. So 42.3 compared to 51.5, there's almost a 10-point difference here. The gap for immigration is smaller, from 44.7 to about 50, so that's relatively close. As for public safety, actually, because he sent IQI or strengthened law enforcement, the public is actually happier about it. It's about 48.9 versus 48.9, because actually, people like it when public safety is more stable. That's the majority view. Not everyone likes seeing protests on the streets or a bunch of strange things happening or a lot of robberies. So this is an area where he actually scored some points. As for the Russia-Ukraine issue, he explained it, but there's no way he can just say it will be solved in a day or how long it will take. Up to now, it still hasn't been resolved. It looks like this will continue to affect him, but when we look at the Israel-Palestine issue, it's very clear. He's actually in the lead, 47.3 to 44.5. Whether you think it's because he's trying to please Jewish donors or for some other reason, that's the situation. Anyway, he really did manage to pause the killings, at least for now. I think when it comes to stopping the killings, at least he still has some concerns about it. So this seems like a relatively better situation here. But what I want to say is, let's get back to the main point, which is, if we're talking about the situation in 2026, the situation with the congressional vote, the vote percentages, basically the Democrats are at 45.8 while the Republicans only have 41.5. So that's the situation right now. This reflects that actually Trump is under a lot of pressure. He can't get reelected, he hasn't done well, but he absolutely can't become a lame duck as early as next year. Otherwise, his remaining 2 years will be really tough, especially if the Senate and the House of Representatives both get taken by the Democrats, then the pressure on him will be even greater. And if there's a chance for impeachment, given how polarized the parties are right now, it's almost certain he'll be impeached again. So now he has to quickly start making adjustments to his administration next year. Next year, you'll probably see two things: relaxation and easing. Trump's main policy focus next year might be what you could call double easing, relaxation and easing. Let's explain easing first, since that's easier to understand. It's about interest rate policy. He will also try every possible way to create an environment for interest rate cuts next year. Now, will there be negative consequences? We don't know. But next year, he will at least hope that once the new Federal Reserve Chair takes office, they can immediately start a series of rate cuts. It's hard to say how much lower he can go, but he just wants to keep cutting rates. That's what he wants. As for easing up in other areas, just look at his tariff policy. There's a chance that a decision will be announced in December, which is only about 2 weeks away. There might be a final decision on tariffs, and next year, if they want to bring prices down, it'll be similar to what they've already done a few days ago, like lowering tariffs on coffee, bananas, and some foods like beef. So easing up next year will probably refer to this kind of thing. They'll be even more relaxed with tariffs, much more so. Even if they have to implement some clauses like 232 or 301, they might go ahead with them. But first, there has to be an investigation. And after the investigation, there are more restrictions before implementation. It won't be a tit-for-tat approach like a blanket attack. So there won't be a blanket approach here. So this part will have a more localized impact, and it shouldn't affect prices that much. The biggest impact on prices would probably come from a tit-for-tat tariff war, that kind of shock. So for next year, with Trump, you can basically focus on two things: relaxation and easing up. This is really important. Relaxation and easing up. That means some of his regulatory restrictions will be loosened and his monetary policy will become more accommodative. As for whether he'll relax some of the restrictions on China, well, we'll just have to wait and see. That's the general idea. He might relax a bit, but there's some things he probably won't let go of. For example, the chip and technology controls likely won't be loosened. But I do believe there's some areas where both sides might be open to making deals. All right, so let's also quickly look at some Trump-related news in the US. The first one is still the Epstein case. Now, in Taiwan, you might not think this is such a big deal, but in the US, the Epstein files are actually a huge issue, because it involves powerful people exploiting underage girls, which is really unfair. So a lot of traditional Christian voters care deeply about this issue. Trump said during the election that he would release the files, but now that he's been elected, he's not releasing them again. So this is something he's got going on here. It does affect him, but I believe that if he actually starts releasing the information, and if he really has nothing to do with it, then his support might actually get a boost and shake off some of the negativity. But there are definitely some important figures involved in this. If you ask for my opinion, I think Trump probably has nothing to do with Epstein, because as far as I remember, Trump likes women. He doesn't really seem to be into young girls. Anyway, that's getting off topic. Also, we should mention that almost all Republican representatives voted in favor. We need to talk about this: Trump's approval and disapproval ratings. Actually, what we see is that his disapproval rating is going up, while his approval rating is going down. The fact that Republican senators and representatives voted in favor of this case is a signal. It's a sign that things are starting to stir, or that they're beginning to look out for their own interests. This suggests that those seeking re-election are starting to look for a breakthrough, making moves in that direction. So here, it serves as proof that if this continues, Trump will be forced to make things public, and he'll also have to start listening to the opinions of at least some of the Republican lawmakers in his own party. He can't just stick to his MAGA faction's way of thinking. He might need to digest and absorb some of the establishment's ideas as well. So to reflect this well, Trump will have to make some major adjustments next year, or actually not just next year, but starting from now. Next, let's take a look at the Federal Reserve officials. The Fed governor has once again issued a warning saying that basically what he's saying is that regulations shouldn't be relaxed. In principle, he means regulations shouldn't be loosened, but because things were tightened too much, it caused resistance from banks of all sizes, large, medium, and small. That's why the vice chair position was handed over to Boom. Now, he's still voicing his opposition, but even though what he says makes sense, it seems like it might not have much effect. What's more important is, yesterday, well, the day before yesterday, after Tuesday, on Wednesday, there was only one, the Richmond Fed's Barkin, who spoke about something more related to monetary policy. He expressed optimism about the inflation outlook and said that the labor market might be weaker than current data suggests. All right, so among the regional Fed presidents, this was a relatively dovish statement. However, he also mentioned another issue, which is that the Federal Reserve is facing challenges on both inflation and employment fronts. The situation where data is missing due to a government shutdown will make decision-making even more difficult. He still needs to look at the data that's about to be released to provide some guidance for the December meeting. Basically, they still have to rely on the data to make their assessments. But at least when it comes to interest rates, his stance isn't as hawkish as some of the other central banks, which are more focused solely on inflation. So this can be considered relatively good news. Also, Trump had some comments for the Fed chair yesterday, which is kind of a hint. Basically, he knows what's going on and will probably make an announcement. As for Bessent, actually, Bessent is someone whose name was given to Trump. Back in Trump's first term, Treasury Secretary Mnuchin also gave Trump a list of candidates, and Trump picked one from there. So now it's Bessent's turn. Trump really wants everyone to take the job, but he says he doesn't want it, of course, because why? Because being the next Fed chair might be even tougher than being Treasury Secretary. So I think he'd rather be Treasury Secretary than take on the role of Fed chair. And then everyone in Shenzhen was saying basically that the decision on the new Fed chair should be made before Christmas. That timing's a bit early, but because this isn't the first time Trump has said it, he's mentioned around Thanksgiving, this sense of timing, that the decision should be made by Christmas. I think the market isn't really surprised by this anymore. Now, I think if Trump wants to, yeah, if the Fed has a different approach or way of doing things, his pick would probably be Kevin Hassett, who has never had any experience with the Federal Reserve and was an economic advisor at the White House, then would go on to become the Fed chair. If he wants to compromise more, then he might pick one of the current Fed governors, either Waller or Bowman, and promote one of them to chair. Basically, I think my chances are a bit higher, not because of gender, but because we just got promoted to vice chair this year, taking over Michael Barr's position as vice chair for supervision. So promoting him again right away seems a bit too fast, since he hasn't even had time to accomplish much before getting another promotion. There will probably be people who have opinions about that. As for Rick Ryder from BlackRock, I think he might just be a cover, because if they really wanted to use someone like him, they could just go with Kevin Hassett. Also, there used to be a board member named Kevin Warsh, but after Trump won the election, there hasn't been any news about him, so I'm afraid he might just be out of the picture. Yeah, maybe he's just one of the candidates, that's all. All right, next, let's take a look at the hope of the whole village, NVIDIA. Most importantly, let's look at NVIDIA's expected revenue, which is $55.189 billion. So you can round that up to $55.2 billion. The GAAP EPS, the median EPS for NVIDIA, is $1.28. So basically, tomorrow morning, you can compare the actual number to this figure. The key point here, I'll summarize it, and there will be another report later that's similar. The first thing is the guidance for the fourth quarter, right? And it's for fiscal year 2026. Just to clarify, their fiscal year is different from everyone else's. Previously, they were already in the fourth quarter of 2026, so very soon we'll see their fiscal year 2027 guidance. Each company can set their own fiscal year. US regulations allow this. As long as you set it and don't keep changing it, it's fine. Another thing everyone cares about is the sustainability of AI demand, new product orders, and the impact on the supply chain. Now, we need to talk about something. If it's due to market expectations, you have to watch whether the stock goes up after hours. If it's because the market is generally positive, we usually determine it's good news. After the good news is reported, you need to see if the stock actually rises. If it's bad news, then you have to see how much it drops after hours. If you ask me, personally, I think it will be good. Also, the next part will come a bit later. Today, well, before the deadline, I saw this news and then added it here. So this time regarding this financial report, what was said, I think it was very good, was about how the market is changing and how the financials are changing, like a weather vane. So this is very important. Basically, it's okay. The financial report for their performance in the past third quarter, I think it's okay. Why? Because you can see here that Microsoft, Amazon, Google, and Facebook, these four companies together account for nearly over 40% of the sales. In other words, to put it simply, sales are very stable, and the total AI spending for the next 12 months is expected to grow by 34% to $440 billion. That means things have looked good in the past, and the outlook for the future is also positive. So in terms of revenue, things are looking good, and combined with their strong technical capabilities, their gross margin is likely to be high. I think it's very possible that the financial report will be solid, both in terms of revenue and profit. All right, but the main issue that we are discussing here is specifically about layoffs and what the future might hold. Now, if we are talking about the most significant and influential AI investors in the industry, especially the company OpenAI, I'm quoting their official statements directly here, it is important to consider their perspective carefully. Especially if OpenAI is forced to cut back on its investments. If they can't follow through on their promised investments, their credibility will take a hit. In other words, if someone backs out, that's a huge blow. I've mentioned before that I think the biggest vulnerability in AI is OpenAI. Some people think it's Oracle, but I've always believed OpenAI is the key. Why is that? Because everyone else has surplus revenue, so they can handle it. You assess their risk based on their situation. For example, take Meta and OpenAI. If their debt is too high, people start to question them, and so their stock price drops. This is actually an efficient market at work. It doesn't mean they can't make it through, but they need to absorb and deal with these negative factors first. If there's a positive turnaround, the stock price can still perform well. But OpenAI is actually a company without surplus revenue, so the only way it can invest is by using equity. That's something you really need to pay attention to. And then, moving on, the next part talks about what the market is worried about. The first is the valuation of AI stocks, then the cyclical nature of financing and trading, and also, well, with so much investment going in, how much revenue is actually coming back? This is something you just can't avoid being questioned about. Like I mentioned earlier, this is the previous narrative logic. The narrative logic basically means that high valuations are fine because the company is growing, and financing and trading are fine because it's in a growth phase. Everyone thinks that way. But the problem is, well, how do you factor in the investment returns? And what if, like with OpenAI, someone can't hold on and we see them pull out next year or sometime later, then that's going to be a big problem. So this cloud of doubt still hangs over things. Until this is clarified, or until the stock price drops so low that these issues can be ignored, the uncertainty remains. The market will always compare, and the pressure at the peak will be quite high. Now, in addition, this report mentions that there are 3 things to watch for with NVIDIA. The first is the sales profit margin of Blackwell, especially the profit margin situation in the data center segment, because the data center accounts for about 90% of NVIDIA's revenue. Then it's mainly about the outlook. Also, it's already known that you can see future growth is slowing down. In fiscal year 2026, which is today, after the fourth quarter results are announced, that's part of fiscal year 2026. The growth is 40%, but next year, in fiscal year 2027, it drops from 40 to 41, from 60 down to 41, then stays at 41, and then drops again to 22. This is a pretty important warning sign, something you should really pay attention to. Okay, and besides that, this concern is actually spread. You can see that the risk premium has spilled over into the credit market. So let me explain. The credit market, shown in red below, hasn't fallen into panic yet. It's just become more hesitant, more cautious. It doesn't mean there's a full-blown panic or a situation where everyone's rushing to sell. No, that's not what it means. What we're seeing now is that the risk premium is relatively high. In other words, I'm being more cautious. Maybe before, if you wanted me to invest more, I'd do it for a 3% return, but now I might say no, I want 3.5% or even 4% before I'm willing to buy in. So you can see that the risk premium is relatively high. Also, some people are pulling out of deals like, hey, seeing the situation, I'm not going to bid anymore. That's happening more often now. And then last week, there were even some investment-grade bond issuances that got canceled, which is pretty rare. This isn't just about the companies I mentioned earlier. It's a situation happening in the U.S. credit market, specifically in the corporate bond market. It's not limited to tech stocks. This is happening across all industries. They're just categorized by credit rating. So you can see that from investment grade all the way down to junk bonds, this situation is present, whether it's investment grade, high yield, or junk. So this is something we really need to pay attention to. On a more positive note, we see that NVIDIA here, together with Microsoft, has made a commitment, like investing $15 billion in this company called Anthropic. And this company, Anthropic, has to commit to purchasing Microsoft's Azure cloud services with $30 billion worth of computing power. But what's the issue here? This is based on the old narrative logic. This would be categorized as what people call this is a risk of reciprocal transactions, because Microsoft and NVIDIA might be, Microsoft might be the end user, and well, Azure might be the end user, and then both of them invest in Anthropic, and then they go buy NVIDIA chips and then rent cloud services from Azure. So this really does look like a part that's being questioned, right? Of course, on the positive side, with Anthropic, after this company completed its valuation, after this deal was done, its valuation reached $350 billion. But the problem is, that's pretty inflated, right? About a month or two ago, this narrative made sense, but now, looking at it, this narrative doesn't really hold up. Okay, and then, but I actually think this next thing is more positive. In the US, probably because of Saudi Arabia, the Saudi royal family, Salman and young Salman, in the past couple of days, yesterday, the 18th, and actually, news has been coming out all morning today, he met with Trump in the US. Previously, the news was that Trump wanted to sell him F-35s. Also, there was news that Saudi Arabia wanted to buy chips from Nvidia and AMD in the US. Of course, before September, everyone thought only Nvidia was in the game, but now, since AMD's technical capabilities seem to be catching up, they're joining in too. So this could become something really important. Because the Middle East is flush with capital, they're likely to use their sovereign wealth funds to finance these so-called national-level AI data centers. Now, when it comes to data centers in the US, they've been built to the point where people are starting to have doubts. If Middle Eastern capital comes in, it could be a pretty good option. Although some people say, oh, China and the Middle East are working together, or that China might rent from them or whatever. The thing is, the Middle East is still the Middle East. Just because there's a middle in the name doesn't mean it's China. Of course, US lawmakers are going to have opinions about this. But the thing is, this is something that can be discussed and negotiated. So I think this is really important, not just for Nvidia, but for AMD as well. It could very well be a major source of growth next year. That's why we wanted to specifically point this out to everyone. This is a great development, meaning that national-level data centers outside of the United States could very likely become a major source of Nvidia's revenue growth next year. Of course, another important point is whether Nvidia and AMD can still participate in China and whether they'll be able to get involved there. That's something we're particularly concerned about, especially from an investment perspective. Looking at the stock price performance, we hope to be able to participate to a reasonable extent. If they can't get any share at all, it would actually be quite damaging for both Nvidia and AMD. Also, just to add on to yesterday's news, Meta recently won an antitrust lawsuit regarding Instagram, and when it comes to the criticism of WhatsApp, it was about sharing certain images and graphics, but the court ruled that this did not violate antitrust laws. So that's definitely good news. However, the problem is that Facebook has been having a tough time lately, often being accused of being overvalued. This news, though, is about Instagram and WhatsApp, and it doesn't really have much to do with AI, so it's relatively weak, honestly. If you're hoping this will actually stop the decline, I think the effect is pretty limited. Sure, this might be a good thing, but it probably won't be enough to boost the stock price. Okay, moving on. There's also something more cautious to consider, which is the monthly survey of fund managers. This is pretty important. If you look at it, when the cash ratio among fund managers drops to 3.7, historically, it's only dropped that low twice since 2002. They conduct this survey once a month, and when this kind of situation occurs, within 1 to 3 months, stocks usually decline, while government bonds tend to perform better. So you should keep this in mind and be prepared. That's the narrative logic here. This way of presenting things is fairly objective in my opinion, but you should still be a bit cautious. Of course, this doesn't necessarily mean there will be a big drop. It could just be a period of consolidation or a slight decline. But the point is, you need to pay close attention and be careful. This is indeed a tourist area. That's correct. Also, yesterday there was a major outage at Cloudflare, the internet security management company. So there was a big crash yesterday, and I heard it caused a lot of chaos everywhere. In addition, the U.S. Congress's U.S.-China Economic and Security Review Commission released a report saying that Chinese pharmaceuticals have a deep impact on the U.S. drug supply chain. They issued a warning, pointing out that the level of dependence is actually very high. That's the main point. According to what they said, for some commonly used medications, 90% of the raw materials have to come from China. And for certain things, it's almost 100% sourced from China. In fact, during the pandemic, the U.S. realized that even needles had to be bought from China. Why? Because making a needle in the U.S. isn't actually that big of an investment. But the thing is, you have to pass the FDA's inspections, and that takes a really long time. So in the end, manufacturers look at the situation and think, I might as well just buy from China. Even if there are tariffs, it's still easier for me to just buy directly from there than to build my own factory here. That's one issue. Another thing I find kind of embarrassing here is this. They have this committee that brings up some concerns, but the main point is with the US FDA, the Food and Drug Administration. They haven't collected this data, which means you don't know the status of the ingredients in these raw materials. So this is a big problem. You know these things are coming in from China, but you can't tell if they're coming in as finished products, semi-finished products, or just raw materials. It's all unclear. So you end up, even if you want to make improvements, you don't even know how to go about it. But let me just say, this is really America's own problem. At the very least, you need to get your data classification in order first so you can figure out what to do next. But that's basically the news. On the other hand, there's some relatively good news. China's rare earth exports in October seem to have slightly decreased, but both the US and China have already made their respective requests, hoping to agree on a so-called general license for rare earths by the end of November. If they can reach an agreement on this, I think it would be good for the market. However, we need to bring up the first point. If this is a general license, you can probably be sure of one thing. This should be for so-called civilian use of rare earths. Military use of rare earths are probably a different matter. Secondly, from the looks of it, from a European perspective, this situation, as well as Japan's situation, maybe this will also be for US only for the United States. For other places, you have to negotiate separately and then come back to me once you've reached an agreement. So that's how it is. At least for the US, this is a good thing. For some gasoline, automotive, or medical-related sectors, this will be okay. So that's good news. As for the rest, let's take a look in a moment. By the way, let's also check out the announcements made tonight. Earnings reports are pretty important for department stores. And then, Ross, this one is quite significant, probably the most important one. Besides that, tonight after the market closes, aside from NVIDIA, there's also this cybersecurity management company. You can take a look at it. Actually, it's been around for a long time. It's from the same era as Cisco and Oracle. For a company to survive this long, it's pretty much a legend, so it's worth checking out. I think its finances should be solid. And then, Walmart's earnings report will also be released. That's the most important thing tomorrow night. Aside from the jobs report, I think Walmart's are the biggest deal. Other than that, there are some other things for everyone to take a look at. There will be a lot of retail industry reports as well. This company will release its earnings report tomorrow night. All right, moving on, let's talk a bit about the financial markets. I want to clarify something here because, well, I've received some concerns about this, so I'd like to address it now. From now on, I'll probably only be introducing the performance of the US dollar, US Treasury bonds, and US indices. I can still share some news and figures about individual stocks, but as for the charts of individual stocks, well, I probably won't be explaining those anymore. The main reason is simple: compliance with laws and regulations. That's all I can say about this, so let's move on. Let's focus on the performance of the financial markets. The US dollar, specifically the ADP data, was a bit weak. So on Tuesday, the US dollar dipped slightly. But looking at it here, the dollar actually seems pretty lively, following along this purple 20-day moving average. However, this purple line is about to intersect with the 200-day moving average. So when the 20 and 200-day moving averages meet, will the dollar be able to break above that resistance? It really depends. If the market's expectations for a Fed rate cut are truly moving lower, then in the short term, there's a chance for a breakout. But even if it does break out, I still think the odds of the dollar making a strong comeback are pretty low. It's more likely to just keep moving sideways and consolidating. Also, looking at the 2-year yield here, the ADP data still has an impact. Then the Fed's comments have been relatively dovish, so the 2-year yield dropped yesterday. On Wednesday, it had a slight rebound, but overall, it's also moving sideways. The 10-year yield is in a similar situation. As for the stock market, actually, U.S. stocks were a bit weaker yesterday. The Dow dropped about 1.07%. I think we need to pay special attention to this because the decline was relatively large, on the bigger side. Secondly, there was a gap down, so everyone should be more alert about this. Okay, so actually, starting from yesterday, or really since last Friday, there have been a lot of big names, mid-level names, A-listers, B-listers, coming out to warn that U.S. stocks might see a correction, but they usually add that it would be a healthy correction. All right, so all we can say is that there is indeed a risk of a correction. If you look at the current trends, they might be hinting at some more conservative signals, so everyone should remember to take those into account. And then, as for the S&P, it's the same situation. I don't think it's looking very good either. You can see there's another gap down here. So even if we see a rebound later today, we still need to keep an eye on this. Actually, after what happened yesterday, if you look at these 3 days, you really need to keep watching tonight, tomorrow, and even into next Monday. Only after these 3 days will the trend become a bit clearer. I can only say this in a more cautious way. Also, as for the volatility index, after rebounding, it looks like it's turning down a bit today, but the key point is, the question is whether it can smoothly converge downward like before. And you have to notice that in October, its high point actually reached around 29. Right now, the current high might not have been reached yet. As for the rest, looking at the performance of the 11 sectors yesterday, you can see that energy and healthcare did relatively well. When you see these two sectors doing well, it usually means the overall market isn't doing great. Medtronic, as a medical device company, performed quite well. And then there's Warner Bros. Discovery had a pretty good rise, but the problem is with Skydance that on the TV side, they said it seems like there was some clarification. This might be a rumor or just market speculation, not necessarily the truth, so maybe it's not actually the case. Also, Home Depot dropped quite a bit. WDC and Micron fell even more sharply, so the pullback pressure on tech stocks is still something to watch out for. As for dividend stocks, this month you can see that funds are still mainly flowing into healthcare. Defensive stocks are doing better. If you look at healthcare stocks, they really are more defensive. As for energy stocks, oil prices are being affected by some geopolitical factors, but I don't think you should expect too much from them. If you really want to hedge, it's probably better to stick with healthcare or other traditional defensive stocks. As for the equal weight index, it was a bit surprising yesterday. It only dipped slightly. If you look at the S&P 500, well, it's not exactly 500 stocks now because with stock splits, there are about 503 stocks. If you assign each stock an equal weight instead of weighting by market cap, then the index yesterday it only dipped slightly, so what does that mean? Basically, yesterday, everything fell, but the big cap stocks dropped more. Whoa, so we need to pay attention to this. It's good news, but at the same time, whoa, you need to consider two aspects when it comes to the stabilization. One is called space, and the other is time. In terms of space, it refers to how deep the drop is. Now, I'm not really sure about this part. You might have to judge for yourselves. But I want to remind everyone that this time, it's possible that after the drop stabilizes, the consolidation period might last longer. Why? Because we talked about NVIDIA's narrative logic. The AI narrative needs to maintain everyone's confidence. You have to wait for a new narrative opportunity to emerge, so you'll need to be more patient with this. Also, as for the NASDAQ, it's the same situation. Yesterday, it dropped 1.21%. I think the candlestick pattern doesn't look good. It kind of feels like it's breaking away, like it's about to run off. As for the Philadelphia Semiconductor Index, it also dropped sharply. In fact, it opened directly below the 50-day moving average, which is a pretty weak performance. Only two stocks led the gains, Texas Instruments and Analog Devices. And then the others, like Marvell, dropped quite a bit, and Micron also fell heavily. So the declines were pretty significant, making them relatively weak. As for the Magnificent Seven, they also saw a pretty steep drop yesterday, because did y'all see that? The S&P, when you look at the equal-weighted version, only dipped slightly, but the main S&P index had a much bigger drop. So what caused the drop? The answer is the Magnificent Seven. Here, aside from the stocks that didn't go up, among those that fell, apart from Apple, which only dipped a little, the declines for the others just kept getting bigger. Tesla, for example, dropped 1.88%, which is quite significant. So all I can say is this tells you that maybe you still need to be a bit cautious. Even if there's a rebound today, you really need to pay attention to some of the technical indicators. To meet those conditions, especially today, if there's a rebound, the thing is, NVIDIA's earnings report will only be released after the market closes today. So aside from any rebound today, what's even more important is tomorrow, after the earnings come out post-market, everyone will be. Besides, we need to watch NVIDIA's after-hours performance. Hopefully it doesn't drop sharply. Then, what's even more important is tomorrow. When the main market opens in the evening, it still needs to be able to hold on to its gains. This is pretty important, especially if you're looking at it from a bullish perspective. So next, let's take a look at the futures and the stocks. Let's take a look at how the money's moving. After that, we'll answer everyone's questions together. Now, the futures market looks pretty good here. It's a rebound, but we still want to remind everyone a rebound in futures is nice, and if the market opens high today, that's good too. But the key is how it closes and how it performs tomorrow after the close. Actually, it's just as important as today, so it's really important to watch for 3 days. Also, as for individual stocks, when they rise, their financial report already has some numbers out. What I just mentioned was the time for the earnings call. Sometimes they'll upload the numbers first, which is better. And CPT is Caden Property. That's property management. If I remember correctly, This is also a company similar to health insurance, and then TJ Maxx is a discount clothing retailer. This one also looks pretty good. When the economy isn't doing so well, companies like this tend to stand out more. And Albemarle, this one makes supply equipment. It looks like the gas sector seems to have stopped falling. Freeport, that's a mining company, seems to be doing better. DoorDash and e-commerce is on the rise. Also, it looks like individual stocks today are showing a pretty strong rebound. We can see that overall they're performing better. Nvidia's up, pre-market, it's up 1.73%. So today, looking at some individual stocks, the ones rebounding are showing signs of a rebound in pre-market trading, which is a good sign. All right, moving on. Let's take a look at this. As for this one, I don't really know what it is. TPL. Texas Pacific, this real estate company, we don't really need to pay attention to it. It doesn't look good. It's still heavily impacted and is pretty weak. Then APA is a bit different. NPC, Marathon holds a good amount. Valero, these are all not doing so well. You can see that oil stocks are generally weak today. So energy stocks are still having a tough time, in my opinion, because the outlook for overcapacity is just sitting there. That's why you see COP is also like this. Energy, Halliburton, that's also energy related. Then this one is home products, which should be announcing earnings. The numbers are already out, so it's relatively weak. So ExxonMobil isn't doing well either. So that's that. It's not good, but it's more concentrated, and it looks like it's energy related. So today's rebound has a better chance. Yeah, everyone, that's some good news here. Now let's also take a look at the US dollar, which has been continuing to rebound. Meanwhile, U.S. Treasury bonds keep falling. So today, it looks like the market is brewing a small rebound opportunity, which is pretty good. Now, let's take a look at the companies that have been upgraded or downgraded. Among the upgraded companies, there's AES. Okay, so about AES, why did I mention it? Because I saw what they do before the market opened, but then I forgot again. It's pretty rough. As for Decker, they make leisure products and have been upgraded. Then there's Illinois Tool Works, which makes things like electric drills, cutting machines, and other woodworking tools. Looks like this one went up. Then there's real estate, and I forgot what that was for a moment. Open One Guest, that's in energy. Hannah should be in real estate. And then looking at the others, SP is actually XPeng Motors, which was upgraded. Then Snap is a subsidiary under Microsoft, and it was also upgraded. On the weaker side, Amazon was downgraded. Then Honeywell, this industrial products company, was also downgraded, and Microsoft was downgraded too. So these are relatively weaker. That's about it. And then there's Rocky Pharma Pharmaceutical. Let me tell you, actually, pharmaceutical stocks, especially those developing new drugs, often get downgraded. Why? Because if the development process doesn't go well, they tend to get downgraded easily. Do you know what PDD is? It's Pinduoduo, and it was also downgraded. All right, next, let's take a look at everyone's questions. Okay, someone is asking why the correction is relatively small. I can only tell you, well, I can't really answer this question anymore, not now or in the future. All right, Python. The China-Japan standoff is getting more and more intense. Honestly, I don't really want to talk about the China-Japan issue because it could drag on for half a year. It looks like this time China's attitude toward Japan seems to be a bit tougher this time, so it's likely that things will drag on for quite a while. All right, yeah. What does a spike in the VIX mean? At the very least, let's talk about LEX and the VIX Volatility Index. It's a coincident indicator with market declines. So it's not a leading indicator, let me clarify that, nor is it a lagging one. It's a coincident indicator. So as long as you see the VIX hasn't come down yet, the overall correction pressure will remain pretty high. When it comes to Arab investment in the US, sometimes I think, well, there definitely will be some. The main thing is that the Arab countries want to build national level data centers, right? So for Huang Wenhui, this chip absolutely has to be sold to them. China doesn't have it anymore, so he can't sell there. As for sales in the Middle East, they can't be neglected. So, yeah. This, actually, we have to wait for the Treasury Department, right? And then also, someone called me, hello everyone, and then the US stock market only dropped a little bit. As for these leading stocks, it's actually about the selection strategy. I still want to tell everyone, because when the market is good, a lot of people rush in to buy stocks, and they like to buy small cap stocks or things that are more volatile. But let me tell you, in the US stock market, for those who have been watching for a long time, I still want to tell everyone that large cap stocks definitely have their advantages. Things like liquidity and the company's competitiveness can make a huge difference. So that's something you really need to pay attention to. Sometimes startups can have amazing gains, especially since the US stock market doesn't have price limits. If you pick the right new stock, that's basically like going to heaven, but the problem is you have to sell at the high point, and that can be a challenge. That's the issue. Yeah, some people say you should just follow the rules, so I just stick to them and play it safe. If you watch for 3 days, you'll see Friday. But actually, if you want to be more conservative, it's not just about watching for 3 days until Friday. You might need to wait until next Monday. Why? Because Nvidia's earnings are tonight. The earnings report will only be released after the market closes. So to really play it safe, you should wait until next Monday to see what the trend actually is. Anyway, what I'm saying is, look, there are a lot of regulations. What we can talk about now are the news and the financial numbers. As for anything more directional or speculative, we just won't discuss those. And, well, that's that. As for things like gold, Bitcoin, crude oil, well, we didn't show those today, and you probably won't be seeing those folks anymore either. So that's how it is. Anyway, after we've been doing this for a while, once everyone gets used to our rhythm, you'll probably start to pick up on the vibe of what we're hinting at. That's about it, so we'll say goodbye for now. All right, see y'all tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.